Hello again, and welcome to another episode of the Uranium Market Minute. Today is Wednesday, November 17th. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you again for tuning in. If you've been enjoying this content, please like this video, share it around, subscribe to our channel, hit the notification bell. You will be reminded whenever we update and post a new episode, which is almost every day. Before we get into the content today, nothing in this video is intended to be investing advice. I'm not your financial advisor, and this is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. Let's get right into the daily scoreboard today. Spot price of uranium down 25 cents to $47 a pound after a couple of decent moves the previous days. Looks like kind of a quiet day in the spot market overall. Yet the equities market looked like it was firming up a bit compared to the last couple of days. Sprott took in another 3.8 million in new capital yesterday. More than likely, they didn't raise more because they likely dropped to underneath that 1% premium to NAV threshold. They closed the day at a very slight premium to NAV, 0.27%. So most likely today, they're not issuing shares into the market and raising more cash. However, they do have 57.1 million in cash in the treasury as of yesterday's close. That's enough to purchase and get another over another million more pounds at the current price of uranium. Since the 17th of August, which is when Sprott's initial ATM, their at the market financing vehicle, went live, they've raised 977.3 million in new capital, and they purchased 21 million pounds of U3O8. They re-upped that second ATM, added another $1 billion after they ran through that first 300 million in short order. They've got another 322.7 million left on the existing ATM, and they will continue to add more to that. They will re-up and get another ATM going after they run through this existing ATM, 322 million. They'll likely be going through that in the next 4 to 6 weeks, in my opinion. Turning to the sector equity ETFs, URA reported a pretty substantial 900,000 new shares issued yesterday. URNM reported no change. Increase in shares from URA equal to mandated buying 26 million of the underlying holdings, which is perhaps why these dips tend to get bought. The sell-offs, as long as there's sufficient funds flowing into the ETFs and at a reasonable pace, the sell-offs usually will be relatively short. Because of the sharp sell-off yesterday, however, the assets under management, AUMs, of the two ETFs declined by 59.3 million. Combined, they still have a combined AUM of $2.46 billion as of yesterday's close. Just absolutely huge compared to last year. They were just around 300 million AUM combined in the March lows of last year. So huge growth for the sector. Let's take a look at the charts. Starting off as usual with URA. Looks like we're seeing a little bit more selling today, although the volume is down substantially from yesterday. And we saw a little bit of dip buying. Overall, not a lot of direction here. Considering we saw sharp sell-off yesterday and the day before, it looks to me like it's attempting to find a bit of a bottom here. I still expect we could see a couple of more weak days, although I don't think they're going to have as much volume or as sharp of a sell-off as we saw yesterday. So I think that the sector overall is trying to find a bottom here in this most recent leg down. It's looking like it's going to try to make a higher low. URA somewhere in that $28 range. If it chops sideways or comes down another couple percentage points as the 50-day moving average rises up and we get near that, that in my opinion would be perfectly healthy, perfectly normal. Would like to see a little bit more consolidation here, and I never really like to see dead cat bounces. I like when the sell-off finds a bottom, consolidates for a minute, and then finds the next leg higher, like the sell-off we saw back in September. That was a very sharp sell-off. It took another few weeks to chop sideways. And the longer it chops sideways, the bigger the moves can be. Then we saw this absolutely huge day on October 12th. And I expect that we will see something similar, perhaps a few more days, maybe another week, maybe two of sideways chop. Although I wouldn't expect it. I wouldn't bet on another couple of weeks, but I would bet on maybe at least a couple more days of sideways chop here before we see another leg moving up, which I do expect for the seasonality trend to continue. Sprott Physical Uranium Trust, also just kind of moving sideways. Volume not huge, but not terrible. Perhaps since the spot market dropped that 25 cents today and the Sprott Trust is up a little bit today, if they're at that greater than 1% premium to NAV, perhaps they are issuing some shares in the market since we're seeing a little bit more volume than the previous couple of days. Cameco, very similar chart to URA. Let's take a look at a couple of other large caps. NextGen also trying to find a bottom here. Denison, same thing. We're seeing just kind of a bottoming pattern across the entire sector here. So nothing really to worry about. Instead of doing a mailbag question today, I'm going to kind of respond to a number of folks who reached out to me and do frequently reach out to me. Sometimes it's the same people, sometimes it's different people reaching out on days of selling, saying, Justin, what's going on? What's causing the sharp sell-off? And so instead of going into the mailbag, I'm just going to speak on that for a second. So basically, first of all, to have that kind of reaction, just recognize that it's instinct, and that's a natural instinct. And even seasoned investors, even people who seem to keep their cool, which some folks have said that I do a pretty good job of that. I think I do. I've experienced enough bloody red days where seeing the entire portfolio down 5+% through the course of this uranium investment alone to not really get shaken very much, especially if the thesis is strong. So, but just recognizing, I still feel it, right? Like the days when everything's green and the portfolio is up 5%, 6%, 7%, or even more, those obviously they affect your emotional being, and the same goes for days that are down. So just kind of like recognize it as normal. If you're freaking out a little bit, or if you're tense, or just worried or concerned about your investments because they're down, I get it, and just recognize that's totally normal. Okay. The second piece that I would say is that what really helps me is understanding the long-term bullish case for uranium and understanding the thesis and the fundamentals as thoroughly as possible is something that we really focus on with the Uranium Insider Pro newsletter. We go way into depth on each monthly letter, probably more than some people even want. Sometimes we'll have 15, 16 plus pages of just macro, where we just really go into the weeds of what's going on in the sector, and why it's so important to understand these things is because on the last 2 days where we had our stocks down 3, 4, 5% day over day, just to understand that that's just a normal correction, the making a higher low on most of these charts, and it's not something necessarily to be concerned about. Of course, if there's fundamental news, if there's sector news that is causing the selling, then you have to break that down and figure out if it's justified, and if that affects you in your position as well. So with all of that said, if there is selling and the fundamental case hasn't changed whatsoever, in my opinion, that's just something to sit through if you're fully positioned, or if you have cash and you want to increase your exposure. You have to take advantage of those moments, and you have to kind of do the opposite of what your instincts are telling you to do. When everything's red, your instincts are telling you to get out so you don't lose more. And when everything's green, you want to buy so you don't miss out on what's possibly going to be even greater returns that are coming. And really what you want to do is the opposite of both of those things. You want to be buying if you believe in the fundamental case for a long-term hold and long-term investment. You want to buy when everybody's panic selling, and you want to sell when everybody's panic buying. That's a difficult thing to do. It takes a hell of a lot of experience. It takes a lot of emotional, how would I say it? Emotional integrity, I guess, to kind of breathe through it and just kind of work through it and take those they're sort of bold steps when the selling is there to be buying, when the buying is euphoric to be selling. It's not easy to do. So recognize that it's simple, but it's not easy, right? The other thing I want to say is that if you're really freaking out, your position sizing is probably way too large. We've had somebody send us an email saying, I purchased 2 of your 10 stocks and one of them is down big today, and these are my only 2 holdings in the sector. Okay, well, that's your first error. If you're going to expose yourself to a volatile sector, you're best to at least spread it out a little bit in between a number of companies. We have 10 positions, and while we do increase the leverage by taking a couple of those positions are options trades, which we're going to talk about in depth in the upcoming members webinar, which is tomorrow on Thursday, the 18th. You want to reduce your risk because these things are volatile. Now, of course, if you go heavy into one or two or three companies and one or two or three of those companies happens to be a winner that is far greater than the rest of the market, then you're pretty happy. But the likelihood of that happening is low. And the likelihood that one of your positions is going to outperform and one of them is going to drastically underperform is extremely high. And so you have to diversify enough to take some of that inherent risk off the table, right? And so if you're really freaking out, you're probably overexposed to the sector or to an individual company, and that's never something that we recommend. So most of the time, you can assuage those fears and that concern that you have on really red days by just reducing your exposure to either a holding that's far larger than it should be as a percentage of your total investable portfolio, or to the sector as a whole. Lastly, I'd like to say that try not to react to every single little day and every single little move. And that's, of course, goes kind of flies in the face of the fact that I'm doing a daily podcast and I'm looking at daily charts and I'm talking about the daily moves in the spot price and the daily moves in the ETFs, but this is kind of what I do. So as far as my own personal investments, let's say hypothetically outside of the uranium sector, I don't look at those every day. If I'm invested in these for some reason that is fundamental, and my thesis is that I will stay in it for a long period of time, I just don't watch it every day. When I review charts of other positions or even of my uranium positions outside of doing the daily podcast, let's say, if I'm just glancing and trying to gauge the overall trend of a stock, I look at weekly charts and I zoom way out. So to look at the intraday moves is kind of panic inducing sometimes for some folks. So if you are one of those people, stop looking at the daily noise and try to focus on the bigger picture, especially and zoom out. If you're like, everything's down, I'm down 10% over the last 3 days. Well, zoom out and look at the chart. Is the chart broken down a long-term time frame? None of these stocks in this space are very, very few, I should say. Most of them are relatively strong. Some of them are huge winners. There's a few that are parabolically overbought. There's a few that are oversold. But for the most part, the charts in the space are healthy, and there's nothing wrong with the selling that's happened the last couple of days. So the last point I wanted to make on that is with uranium in particular. So stop and ask yourself, do you think that this bull market is over at $47 a pound uranium? I mean, that's a basic sort of thing. I mean, there's been times where I've considered taking some profits off the table and some stocks that I feel are overvalued, right? And then most of the time I don't do it because it's like, well, what else am I going to put it into? Do I think this market is over? It's better just to hold on to what you have and just hang on through the ups and downs. This market is far, far from over. $47 a pound. We've got another 50% move just to justify bringing the some of the care and maintenance mines back online. We got an even bigger move to get to the marginal cost of production, even if you don't factor in all of the influence that's likely to happen in the next 12 to 24 months coming from the financials. So this market is far from over, and that's something I ask myself on days that are not only on euphoric, overbought days where everything's green, but also on selling days is like, there's nothing to be concerned about. The fundamental case is strong. This market's going to go on for a long time. Just going to chill. So hopefully that helps you. And if you've reached out to me and I didn't respond, I apologize in terms of concerns about the selling. If we are concerned and you are a member, you will hear from us. If not, there's nothing to worry about. So that's another thing that we really try to help with in terms of messaging to our members. So last week there was, and I spoke on it briefly in in a uranium episode, a Market Minute episode, where the CRDN, the Clearwater River Dene Nation in Saskatchewan, had put out a press release, and a lot of people were panicked about it. And there was some selling, maybe still is some selling related to that. And we put out a press release or a bulletin, email bulletin to our members the following morning after speaking with a couple of the companies and having a clearer picture. And so we want to communicate as quickly as we can, as soon as we have a grasp on whatever is happening in the sector. If it's a concern, we'll let you know. If it's not, chill. If you're in this for the long term and you're still establishing positions, then selling days are your opportunity to increase that exposure to the sector. All right, for everyone who's a member, we look forward to seeing you tomorrow, Thursday the 18th. We'll have our members webinar. This will be at 11:30 a.m. Eastern time. We'll have a couple of special guests, management members from one of the companies that we own and recommend. And we're going to go into deep detail on what's going on in the sector, what's going on with our focus list positions, and going to go into detail in these options trades. We're looking at a couple of others potentially for the near future. So if you are a member, we'll see you there. If you're not a member, you'd like to join up, we will see you tomorrow. Lastly, I'll mention once again that we will be raising our prices in less than 2 weeks on December 1st. If you lock in the price by joining before that date, you will only pay what the current price is on any year that you join and you stay on as a member out into the future. So we look forward to having anybody else join us. Thank you so much for the great community that we've already built. Really appreciate all the support, and member or not, thank you for watching this. I appreciate all the support on Twitter and on YouTube. Thank you for being here, and hope you all have a great rest of your day. Cheers.